China's Evergrande crisis is all over the news. It caused such a shake-up across global financial markets, India as well. We saw, those shivers cascading through markets worldwide, including benchmarks here in India. Monday we saw a nosedive, Tuesday a recovery, before markets finally stabilized somewhat. But let's tell you why. The Evergrande Group is China's second largest property developer. If we look into their sales, it does hold quite a glorious past. In fact, in 2019, it was ranked as 138th on Fortune's Global 500 list. And as for the company's annual report for the year 2020, it has a gross profit of, wait for it, $19 billion. That gives you the kind of scale that we're looking at for the group. The debt, however, and this you really should wait for, was $304 billion. I repeat, $304 billion. Now this includes borrowing, contract liabilities, trade payables, along with current and delayed tax liabilities. So it also expects a continuous decline in contract sales in September, which could create huge pressure on the group's cash flow and liquidity going forward. The shares of Evergrande Group are about $2.2, and this was the fraction of the company which we saw in initial days. That's how much the share price has actually come down for the group. The stock markets are keeping a close watch on this. Evergrande's collapse has had a spillover impact on various other sectors in the Chinese economy. It could lead to several job losses as well. The entire global economy could see the impact or feel, the collateral damage from this if it does hit the Chinese economy even harder. Analysts believe the company will need to negotiate a restructuring plan with banks, and that's really what hangs in the balance. We have to see how Chinese regulators look to address this. The amount of Evergrande's debt is equal to 2% of China's GDP. This is one of the biggest debt piles in the world, and given that China is the second largest economy in the world as well. Evergrande's collapse will have a serious impact and will have a domino impact on markets around the world, and that is really why everyone is keeping an eye on what happens and how the regulators will choose, whether they will choose to bail out the companies.